Greetings to all our Wealth Migrate investors. Great to have you online with us today for this very exciting webinar as we introduce a new partner. But before I get to them, I'd just like to say hello to an old friend who is currently sitting in Dubai. Hello, Lee. It's great to have you on board. For those of you who do not know Lee, Lee is the head of our community at Wealth Migrate. Lee, good to have you here with us today.
Hi guys, it's good to be online again and excited to introduce a new partner to our community. We're very excited about the product that they are bringing, and we really hope that you join us in the excitement as well.
Great. So for all our investors, Lee will be monitoring the questions today. So please feel free at any time just to put in questions. You'll see on the right-hand side of the screen, there's a spot where you can put in questions, and we will make sure that we get to them and ask them of Wayne and Nick as soon as they come through. Just the normal compliance notice for all our investors. I'm sure you're used to it by now. Wealth Migrate does not give advice. So today we are very excited to be allowing you to hear directly from Wayne and Nick about their offering. And let's move straight across there. So our brand new sponsor that is joining Wealth Migrate, the deal went live literally 15 minutes ago, Opportunity Private Capital. And we are joined today by Nick and Wayne. Guys, really good to have you on this webinar with us.
Hi guys, how are you?
Hi guys, hello Lyndon. Hi Lee.
Yeah, it's great to have you here. I'm going to hand over to you in about 30 seconds. But what I'd like to do first is just share with our investor base where they can find your information that we're going to be talking about today on our platform. So first, let me just share my screen. Let me just confirm. Lee, can you confirm for me whether people can see my screen?
Yes, we can see it.
Fantastic. So I'm hoping that what you're seeing is this is our platform, and if you come into the marketplace section on our platform, newly made live today is the Southwark Village Construction Finance Investment deal, which is the deal we will be talking today. And if you just click on that deal, it'll take you through and provide you with our normal deal page that'll have all the information that you need and that we will be talking through today with Nick and Wayne. Of particular interest, if you go and download these documents, you'll see here on the right-hand side, we have two very exciting, really great documents that explain this deal in good detail with very clear explanation of how it works. The first one is a general, and the Doc A is a general overview of the company, and then second Doc B is a real in-depth insight into this particular deal itself. Now, just a note for all our investors, this deal at this point is only available for South African investors, and as we go through the next 30 minutes webinar, we'll explain as to why that is. So it is limited at this point only to South African investors. And with that in mind, what I'd like to do is, Nick and Wayne, I'm going to pull up the documentation here that I have downloaded earlier, and this is from document A. And I'm going straight to the money question, which is, who are you guys and what's your track record? So I have your track record open in front of us on the screen, but maybe you can just give us a quick insight overview of who are you, what is it that you do, and what is your track record in this space?
Hi, I'll try and keep it short. I tend to go on a bit if not stopped. So I'm Nick. The company's been going since I come from an investment banking background. Wayne was already developing estates by the time we got together. And the premise behind the company is really to have something where private investors could co-finance development projects, ostensibly alongside banks at that stage, but where they'd have a vested interest in the project as well and returns from it. So our objective over time was to have these projects financed by private investors alone, and that has come to pass over the last 4 to 5 years. We've done projects to the value of just over 150 million using only private investor capital, no bank funding whatsoever. So we've achieved what we set out to achieve, and we're growing from here.
Great. In that time, how many somewhere else in this document, but it's not in this particular set of stats in front of us. How many deals have you put through? I mean, 104 million in private capital invested. That's significant. That's a significant number right there. How many deals did it take you to put that through?
So we've financed 9 projects in total. Some of those projects have encompassed not just the development, but also the construction financing. So there have been multiple investment opportunities among those. That's in close to 400 million in total project value over that time.
That's great, and if you go through here in the documentation, there are some of the examples that are included in your guys' portfolio. Now, this is an asset-backed financing, so maybe you can just explain to us a little bit about how that works.
Okay, no, there was okay. Can you just repeat it quickly?
Sorry, did you guys get the question?
I'll just say that again because there was a bit of noise there.
Yeah, I'm apologizing. I'm actually on the road, so I'm in a co-working space today, and it's just a bit noisier than I would normally be. So I apologize for times to lose me. So the financing here is asset-backed. How does that work? How do you guys structure that?
Okay, so just to add on to what Nick said, I'm Wynand, and to briefly, he outlined where we started. So sort of my portfolio was to structure these transactions, these property transactions. To get straight to answering your question is adding again to what Nick said is we've developed this process whereby we don't use bank financing anymore. And in short, what we did is we looked at how the bank structure works, and to offer the investors the ultimate security, we obviously need to offer them the ultimate asset. So how that works is we register in very simple terms to understand a first mortgage bond over the property in favor of the investors. So we'll go into that detail later if it's so required. But in short, asset-backed actually means that the investors, in simple terms, have the first claim on the major assets, which would in this case be the land or the actual property, depending on where they get involved in investment. Does that answer your question?
Yeah, absolutely. Absolutely. One of the things that made us really excited here at Wealth Migrate when we came across you and started engaging with you around the potential to offer this, is that your timeline in terms of the investment timeline is quite a bit shorter than our normal timeline. Often we will have a development loan or even an existing building where the exit strategy is normally 3 to 5 years. But in this particular deal, what excited us is the way that you split your development process into 2 very distinct different timelines, and that creates an opportunity for investors to get out or to test the waters in a way at just one of the phases, and then if they want, they can roll that over to the next phase. But maybe what you can just do for us is explain, I put them up on the screen from your documents in front of you, how you split the process and given 2 different opportunities where investors can come in.
Okay. So in short, if on the screen on the left, what that is the actual start of the project. So that would be the land component. On the right would be the actual construction component, which is the transaction we're handling at the moment. So if you go down the offering on the left, which is obviously already completed on a previous offering, is you'll note that there's a higher interest rate. In short, the reason for that is because it's right in the beginning of the project, so we're literally getting into the land. And the term is a bit longer because typically that would involve either a zoning process or SDP approval process. So typically our experience has been, that it's between 12 and 24 months. And then leading on to the right-hand side of the screen, which is the construction side of it, is then obviously once we go into the actual project building. So if you combine the 2, and you mentioned the rollover is exactly where we find ourselves at the moment, is some of the investors, because we've finished with the land, literally just roll over into the construction side and the 18%. And if you're looking at it from a time point of view, the construction one is typically shorter. And the reason for that is we commence with construction up front, and then at a later stage, we bring in the investors. So we do the initial inputs of building the houses to a certain level. And if you combine the two, if you're an investor in both in a typical project, the average was about 15 months. So it depends on the portfolio and the requirements of the investor, whether he wants a medium or a short-term investment. We can obviously, in the context of this, accommodate both.
Oh, guys, I see the return you get differs between stage A or stage 1 and stage 2. And our assumption here for a lot of investors as well, that some of them get quite nervous around new developments. But what's exciting here is that in a way you have put the high risk section, that section where there's nothing on the land, you're going to have to put in infrastructure, you're going to have to go through zoning. You've created that separately to the second phase, which is all of that's now complete, and it's much easier just to get the buildings done. Is that why the difference is there between the 21% for the first phase of your development versus a slightly smaller 18% on the second phase?
Yeah, and that's 100% correct. To just maybe delve into a little bit more detail, is when we approach the 21% investment, what we do is we raise sufficient capital to call it unlock the asset. What I mean by that is we raise sufficient capital to actually purchase the land, do the infrastructure. When I say infrastructure, it's a typical roads and services, boundary wall, gate, and everything. That when we're finished with that, you actually have a tangible asset. What I mean by tangible is let's say there's 20 plots in the project. You can actually transfer the individual plots. So that's like a milestone where you can literally exit the project if you want. So, and then you can move into the construction. So we've basically split the projects, as we've mentioned earlier, to allow for risk management and for the investors' flexibility.
Yeah, to lead on from that, Lyndon,
yeah, go.
Just to bear in mind that the stage we're at the moment is the first 17, 18 units already under construction. We, in the first phase, should be close to roof height by the end of July. So we're quite far along in the process as well, which further mitigates risk.
Great, and since we're on risk, if we can have a look back at your last 9 projects, in terms of the percentage in which case you delivered to the investors what you said you would.
Lyndon?
Yep.
Sorry,
Could you hear me?
Yeah.
Sure, sorry about that. Let me repeat the question. In terms of the 9 previous deals you've had, your percentage success rate in terms of delivery to investors, in terms of what you committed to the investors?
Well, our model's changed a bit. So when we were funding initially alongside banks, we had a slightly different rollout structure. Over the last 4 or 5 years, we now give investors a percentage return, a fixed return per annum. This is beneficial to them because it gives them predictability, so they know exactly how their investment's going to perform. Over the last 4 or 5 years, this is the 5th, just in this greater area, this is the 5th investment that we've structured, and the guys have averaged between 18 and 20% per annum achieved returns.
Yeah, that's phenomenal. I mean, just purely as an investor myself, I normally am fairly happy if I can hit between 10, 12% returns on an investment on an annualized basis. So if you guys are offering a return on up to 18%, that's certainly something definitely worth looking at, even in my personal capacity. In your document here, you talk a little bit about the risks associated, your development risk, your market risk, investor and security risk, and your operational risk. For investors going into your investment, what risks do you think they most need to be aware of?
Lyndon, I think as we've addressed the actual securities, from a risk point of view, I think it's time and liquidity. And we would identify that as the only risk at the moment. And I'll tell you why, is because we also approach this like a bank would. So the question is, would a bank finance it, and how would a bank view it? So, and in saying that, hence the reason why we have these securities in place, the security structure. So from a risk point of view, I think it's basically those two. Because if anything were to happen to the project, the whole structure is in place to accommodate any external factors or economic factors.
So when you spoke about time risk, I know in an earlier conversation I had with you guys, you mentioned that even if the exit takes longer than expected, while you're waiting for that, you're still earning the 18%. So, you know, the longer it takes, the higher your actual return will be because you're continuously earning. It's not like it's a set amount. So if the project takes 8 months instead of 4 months, well, you'll get twice as much return on that because the 18% is just ticking over the whole time.
Yeah, that's quite right. And so if your investment is prolonged, you keep on earning. The developer, he earns less. So it's within his best interest to make sure that the development is finished on time, so that his projections work out according to that.
And maybe you can just talk us through the actual exit process. So when do people actually get their money back?
Did you say exit process?
Yeah, when do the investors actually get their money back?
Okay. So as mentioned previously with the securities, we actually link an investor to a specific unit. So the investor does not flow into a transaction, it just becomes a part of a pool. So what happens is once the unit's constructed and transfers to the third party or the end purchaser, on that moment, the investor is repaid. And just in brief, how it works is, and that's actually how the flow of funds work, is that the investor funds never flow towards the development entity. It's always via the attorney's trust account. And that's why our structure is developed that we have a Noble Shield Security Trust. Like a bank, when there's transfer is imminent, the trust needs to consent to the transfer to happen. And once that happens, obviously the funds then flow straight to the attorneys, and then the attorneys does the repayment to the actual investor. Does that answer your question?
Yeah, absolutely. So I think we've talked a little bit about your general model. So let's have a look specifically at this deal. 18% interest on the finance that's being offered. Minimum investment of 100 Rand. Maybe you can just talk us through, I'm going to go to the infographic that you've put in here. Let me just find it quickly because I think it's a great infographic that helps explains. Sorry, let me just get to that point in your document. Maybe you can just talk us through some of what's in front of us here.
Okay. So do you want me to talk through the infographic, or do you have a specific question, Lyndon? Because look, I'll go through it quickly. Firstly, minimum investment, as you said, 100,000 Rand. What happens is an investor, when he signs the loan agreement with us, he's not only does he become a beneficiary of the trust, which holds the covering bond, he also is linked to a specific unit, as Wynand alluded to earlier. In this particular investment, the initial time will be approximately 5 to 6 months, at which time his exit option would come up, and he'll have the opportunity then to exit his investment, which would include his capital plus his accrued return, or he could roll over into one of our next available options if he so wishes.
All right, so that's a good point. So the investors need to understand that they get the full amount back all at once. So they get the capital and whatever interest has accrued only at the point where that particular unit that their loan was linked to gets sold. And your experience to date is that that's normally a 4 to 8 month time period?
Yeah, it's project dependent, but it's usually in the region of 4 to 8 months. And on this project, we projected 5 to 6 months before the next rollover period.
And this particular project, in terms of how far down the line, I know you mentioned slightly earlier that we are quite far down the line in terms of its development. Can you have an estimate here in terms of this project's timeline?
Is your question on transfers and deliverables?
Yeah, just in terms of this project's timeline, how long do you envisage this project taking?
So our aim is to have most of the units transferred by the end of the year, if that gives you an idea. So, that's our aim. So that's our aim.
What I want to do is I want to shoot across to Lee. Lee, you've been listening. Is there any questions that have been coming in from the investors, or any question that you yourself might have for Nick and Vaynant on this particular opportunity? Lee, we can't hear you.
You know, you think I would be used to doing these webinars by now and unmuting myself. Sorry, guys. So the only question that has come through is why only South African investors?
So
is the question to us?
I think it's huge. We have quite a few overseas guys, and this has come through from France, which is one of our overseas guys, and he would just like to know why only South African investors.
Yeah, I'm happy to take that question.
We'd love to open it up to overseas investors. The problem is the return of funds. So when the attorneys have to repay the investor funds, they don't have the facilities in place to do those cross-border payments. So what we're trying to put into place, and there's some tentative chats about it, is where our attorneys would pay money into an FX company that's located in South Africa, and then they would facilitate the payment over to the person abroad. But at the moment, we're not there yet, so we're very exclusionary from that point of view.
Yeah, maybe I can jump in and have a go at that one as well, Lee. Nick's 100% right. I think for South Africans, we're all aware that there are exchange controls. So for companies or individuals to take money and send it out of South Africa, you have to be compliant and get very particular permissions from the South African Reserve Bank. Now, in this particular case, the issue is not whether the investor is offshore, but whether their bank account is offshore. So if there is a non-South African investor who has a South African bank, then that's not a problem at all. We can certainly handle that type of investor. I think the other difference in this particular deal from a Wealth Migrate perspective is that, as many of you know, Wealth Migrate normally aggregates investors into our own legal structures, and we then invest as a single structure into our partners' deals. In this particular case, we are doing what is called an independent structure deal, and that basically means that Nick and Vaynant and their company are providing the structure for the investment, and Wealth Migrate is not providing a intermediate structure here. And once again, the main reason for this is due to this exchange control problem. So when you as an investor in this particular deal invest through the Wealth Migrate platform, we are actually connecting you directly with Nick and Vaynant and their attorneys, and your contract that you sign is directly with their company and not with Wealth Migrate, as is the norm on our platform. So this is a deal that we've tweaked just to make sure that we can handle the South African exchange requirements. I think I got that. Lee, any other questions on that one?
Yes, we've got one that's come through from Stephen saying, hi Lee, is the 18% a guaranteed return? Apologies if this was discussed earlier. I missed the first few minutes of the webinar.
What does he mean by guaranteed? Because I'll answer the question in this way. The 18% is a fixed return, okay? And it's paid, obviously, as mentioned, on transfer of the property. It's not a guarantee in the sense of if there's an economic meltdown and everything goes to zero, that it's a guarantee. It's still an investment. I don't know if you can be a bit more clearer about it, then we can give a more accurate answer.
Yeah, Vaynant, maybe I can have a go at that as well. So my understanding of the question is that in some deals that we have on our Wealth Migrate platform and in the real estate sector in general, the return is dependent on a whole bunch of variables in terms of how much profit the developer makes, how much the rentals are, etc. So it's variable. In this case, my understanding is that a fixed contractual amount. So in that way, it is guaranteed that as long as the project completes, the amount that you're offering is an 18% interest on the financing that they are providing, and it is in a way it's the guaranteed amount based on that. It's not going to be 16% or 20%. It's a fixed interest amount that is contracted between yourselves and the investors. Is that correct?
Very well summarized.
Perfect, and thanks, Stephen, very much for that question. Leo, are there any other questions that have come through from our investors?
Those are all the questions that have come through this afternoon.
All right, brilliant. So in terms of this particular deal, guys, I think we have a very good understanding. I'm trying to just find, here's the summary. It's 18% per annum fixed. So I guess that would be an alternative way of saying guaranteed. It is a fixed 18% per annum. The expectation is that you will probably be in the deal for anywhere between 4 months to 8 months before your capital and the interest earned is returned. There's a minimum investment here of 100,000 Rand. The process, if you would like to go onto the Wealth Migrate platform, we are handling all the FICA and the KYC, so all the regulatory pieces, on behalf of our sponsors, on behalf of our partners.
I think we've lost Lyndon.
Lyndon, we've lost you. So while we try and get Lyndon back, another question has come through from
Once you
Noel.
have completed that and made your pledge, we go through the meeting legals.
Okay.
You're back.
Lyndon, you're back now, and we lost 90% of that. And we've lost your
Surely I could hear.
your image.
He's trying to come back.
Lee, do you want to ask that question whilst we wait for Lyndon to?
Yeah.
Research.
We've got another question, and I'm just going to ask it. It's been posed by Noel. He says, the return is exceptional. Expensive financing for you, though. Why use such an expensive finance vehicle as opposed to, say, banking finance, which would be cheaper?
Okay. Okay. So, Lee, that's a very long answer. So, to explain exactly how that works. But what I'm going to do is I'm just going to tackle one component thereof. So, in short, what we've done is we've analyzed the whole industry from construction through investment, through sales, all of it, okay? And we've analyzed that, and we've actually made the process shorter, and we are involved in various components, okay? So I'll give you our model to explain maybe against how a bank would operate. So if you were to do this project, number one is you would obviously identify the land, then you'll have to try and buy the land, and probably have to buy the land. Then you have to do your plans, go through that whole process, and then you have to go into sales. Then once you've achieved the adequate sales for the bank to finance you, then you'll only have financing for the project. That whole process can take you 6 months to a year. Okay? Our model, the other way around. Our model works where we identify the land through our investors. We immediately buy the land. Obviously, the due diligence and all of those things are quite apparent. Okay? And we go straight into the project. So by the time the normal person or normal banking financier gets into the ground, we're almost finished with the project, okay? Then, I mean, I can go on for hours with this, the whole process, but one important component, when you go to the bank, all your sales, obviously, as I mentioned, has to be concluded and they're locked in, okay? When we build, we can actually increase our prices whilst we sell and whilst we build. So if you just do a simple calculation on one component as we increase pricing, and you calculate what that is one of the components that allow us to use this model and not use a bank. So as I said, I can spend an hour going through all the different components of it, but just to give you, identify one component where we sort of have additional profit, where you can't go to the bank and say, okay, well, I actually want to cancel this deal and resell it because I can get double the price for it. Does that make sense? Nick can add something else, but I mean, it's a long discussion because we've scientifically analyzed this whole process.
Yeah, to add on to that, so our revenue is technically quite a lot higher than someone's revenue would be over the whole project if they went to the bank, which is what Bainan said. What people very quickly forget is that banks charge you a certain interest rate. So in this market, they'd probably charge you 11, maybe 11.5%, depending on the project itself. Then they charge you a facility fee. Now that facility fee is going to be anything from, depending on the size of the project, from 350,000. We had one project where the facility fee was over $1 million. Now, if you add that onto the interest component that the bank charges, suddenly you start seeing that the global interest rate that you're actually paying the bank is a lot higher than the 11% that you've signed the deal for, which makes 18% not that bad when you look at the entire picture. I hope that answers that question.
So to add on to what Nick said, that's another component. So what we've done is we've identified all these components and the flexibility that allows this model of ours to accommodate, let's call it, the higher interest to the investor. And just to, in closing, add on to what the previous question was, is that's why our model is shaped around the investor. That's why if the developer does not perform, his profit keeps on diminishing. So that's why we take all of those things into consideration when we go into a transaction. I hope that answers the question. As I said, it's quite an extensive answer, which we'll gladly go into if it's required.
I think that's great. Noel, if that doesn't answer your question completely and you would like for us to put you in touch directly with Wynand and Nick to get clarity on that, please just let us know. We're happy to do so, and I'm sure they'd be happy to answer you. And we've got another question from Terry. She just wants to know when the deal closes. Do you have a hard stop on the deal being available?
So
I think, isn't that a Wealth Migrate question to answer? But in short, we've got a couple of windows for investment. So the first window will close at the end of July, and then we'll have another window that will open up in August. It will close at the end of August.
Great.
Maybe I can jump in there, Lee, just quickly, and because I think it's a related question in terms of, is there a maximum amount, and at what amount is this opportunity trying to raise?
Isn't that
Sorry? Yeah, so what we need to raise by the end of, or to finance it for the construction phase by the end of July is 5 million, and then another 2 million is required up to the end of August.
Okay. So 7 in total.
Right.
Was there a question of a minimum?
If I can just, no, maximum. I think, if we're talking 7 million, 5 million by the end of July, in terms of our Wealth Migrate pattern, that's not large amounts. So to all the investors, I would encourage, if you want to be part of this deal, do jump on quickly. I don't think this deal at these returns are going to hang around very long. My suspicion is we might close this one quickly. So I really do encourage those who are interested to go through the process on the platform. If you would like to speak to Nick and Wynand directly, we will connect you. Please just email us, and we will make sure we put you in touch with them directly if you have any follow-up questions as well. Lee, were there any other questions, or Nick and Wynand, do you want to add to that? Yeah.
Yes, please. Yeah. So just to answer that, when we first chatted, our requirement was 10 million, but over the last few weeks, 3 million has been pledged by our direct routes already, which is why there's 7 million left.
Great, and I think that's a good indication of how quickly this might go. So if you are interested as investors, this is not one I think that's going to hang around very long. So certainly, I think if taking on what Nick's already said, Wealth Migrate is not the only source of funds for them. So we certainly do encourage people to move quite quickly on this one. Leah, were there any other questions that have come?
That's all from our community this week.
Brilliant. So what I was saying when I think I went offline, so apologies for that. As I said, today I'm in a co-working space because I'm on the road, and I apologize if it's been a bit noisy on my side. The process here for our investors, please go onto our website. You will need to make sure you have completed your KYC, your FICA documents, and been verified. That is an important part of being able to access this deal. Once you've done that, you can make your pledge on the platform, and we then hand you from that point over to Nick and Vaynant and their team to finalize all the legal documents, etc. So please do go onto the platform and complete the process. Nick and Vaynant, any final comments from your side before we wrap up for today?
I've got a short comment. I think from our point of view, you know, we've known Scott for a while, and we've known you guys and enjoyed what you do. And it's exciting for us to introduce our product to this platform for the first time. And I'd like to think that our opportunities allow investors to stop being bystanders, because really it's their turn to be the bank.
Yeah, Nick, I love that, and I think it's why we're so excited to have you as a sponsor, you and Vaynant joining us. I think we share the same perspective on what we're trying to achieve in the world. We're all purpose-driven in terms of making investment opportunities open to ordinary people so that we can all invest like the 1% and earn the kind of returns that people like the banks do. So I definitely believe this will not be a once-off opportunity with you. We are hoping to continue raising funds for projects with you guys beyond this. And for all our investors, don't count on that. This is the one that's on the table right now. So if you want to get in, this is the one you need to get in on now. I think with that in mind, I really want to say thank you, Nick and Vaynant, for joining us. Thanks, Lee, for handling the questions. And to all our investors, we look forward to hearing from you. Please contact either myself or Lee. It is Lee, L-E-E, at wealthmigrate.com, or Linden, L-I-N-D-E-N, at wealthmigrate.com. And we will connect you with Nick and Vaynant if you have any further questions. If you know you already want to invest, please go straight onto the platform, complete the process, and we will get it moving as soon as possible. With that in mind, thank you everyone for joining us today. Thank you, Lee. Thanks, Nick. Thanks, Vaynant. It's been great having you online.